You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to the Investing Matters podcast. My name is Peter Higgins. Today I have the huge privilege and delight to be interviewing Sydney, Australia-based Jessica Amir, Market Analyst with the multi-asset investment specialist Saxo Markets. Thank you ever so much, Jessica, for joining me. I know you've had a long day of work already, and it's brilliant to be speaking to you from here in Leicestershire with you in Sydney. Thank you for coming onto the show.
Thanks for inviting us on. We've had a huge day. The Reserve Bank of Australia had a meeting and non-stop, but it's a privilege to be with you, Peter.
Thank you ever so much. Now, Jessica, I want to have this conversation with you because I think it's very important that we speak to as many female thought leaders, analysts, psychologists, fund managers, etc. So I want to start with asking you about your first interest. What piqued your interest in the world of investing and investments, please?
Thank you. Great question. I think it was when I was growing up. I was more or less pushed into it by a family member. So I started working for my dad, basically straight out of school. And we were teaching people how to build a portfolio of investment properties. And my uncle was a financial advisor. He said, "Hey, Jess, why don't you consider expanding out the portfolio a little bit more and look at shares? Come and join me. I'm an advisor." And I was like, "Okay, I'm going to try this out." And then I got my qualifications, and then I joined AMP, and then there I was. And I quickly realized that there was a huge gap in the industry, not only in Australia, but also for women. And then thirdly, Peter, I also realized the stuff that I learned was not taught at school. So basic things like how to save, 10% of your salary should go towards long-term savings, little things like that. And then later on in life, I'm still teaching people things that should be taught at school. So it was really this access to simple education that just needs to be made available to investors at an early age that kind of got me inspired to get in. So here I am today, about almost 15 years later.
Fantastic. Now you skimmed over a little bit there. You qualified as a financial planner, now, which is very important. Really, that's a skill that everyone needs to be these days regarding everything changing. So let's talk about that, because you become a financial planner. You went AMP, which is a fantastic and massive company, Commonwealth Bank, and then Suncorp as well. So let's talk about that a little bit. First, on the financial planning side, getting the qualification and working for those very large organizations. What were your learnings from that?
Well, I'd say I probably learnt the most when I worked for an offshoot of AMP. And by offshoot, I mean they focused on looking after clients that are deemed ultra high net worth. And so they typically have more money than the average retail investor, say, like myself, for example, let's say. And sometimes they require a little bit more complex strategies. So they typically have what we call in Australia self-managed super funds, or you're setting up company structures. And this was before the days of technology as well. So we were literally setting up trust deeds. We were opening shared trading accounts. We were literally picking up the phone and say, buy 200 BHP shares at this price, and then hanging up the phone and then writing it in, and then it was all manual. So I'd say that was where I really cut my teeth, starting at the bottom in client services actually. and then working my way to become a financial advisor over the years. But I also found myself in AMP's Plan a Pathway program, where they essentially teach you how to be a financial advisor over 18 months. So they literally have you writing a statement of advice, showing you for legal and compliance purposes what you need to look at when you're looking at someone's financial position, how to actually model scenarios, and then how to build essentially an asset allocation, and then how you would implement it. So did that, and then the other half of the program was essentially advising people over the phone. So that was where I really kind of cut my teeth. And then I wanted to grow and evolve, and I started my own radio show. And this is where I really wanted to help more people, because it was more one to one. And I thought there's got to be a better way to get out there to the masses. So that was when Peter, I started the radio show. And then a friend of mine was at Sky News, and she said, Jess, why don't you come to our program? And I thought, okay. And they had a program called Your Money, Your Call Shares and Your Money, Your Call Property. So it was kind of like both of my skill sets, property and shares. And then so I was financial advisor by day. And then at night, I was pretty much orchestrating TV bulletins. And then I moved to become a reporter. And then I married kind of like the best of both worlds. And then um, and then I was like, I don't know. I think I want to do this a little bit more, sharpen the saw, as they say. And then I dived into being a full-time TV reporter, specializing in financial reporting. And then I was like, no, got to go back to sharpening the saw again. And then I came back into the financial industry, helping clients one to one. But also, I've got the privilege of speaking to people like you, speaking to people in media. So 30% of my job is helping clients, 30% of my job is in media. And then, of course, I've got to come up with stuff to say. So the other 40% is research. So that's more or less kind of how I got to where I am now.
Brilliant. Now I'm going to go back a bit, because once again you've just missed a few bits, which I'm like, we need to share this information. You're far too humble, so I'm going to just throw you under the bus here, Jessica. Right? Listen. So ABC, Sky News, 7 Network, 9 Network. I probably missed out a few, where you've interviewed prime ministers, including Tony Abbott, Julie Gillard, Kevin Rudd, several federal treasurers, and numerous ASX 200 CEOs. So with all of that, you've done absolutely phenomenally well, and you've still got a long way to go to cover all the goals and ambitions I know you sincerely have. So can I ask you a couple of questions regarding those individuals you've interviewed? Okay. Please, can you share your views regarding the great leadership qualities, recurring qualities you found from interviewing and speaking with those significant high-profile leaders and CEOs, please?
Well, I'd say in one word, Peter, I'd probably say it's messaging. Political leaders, they've always got a message before they come to a presser, which is what we call it in TV, or a press conference. And before they get there, we'll have a little bit of a chat and a little bit of a banter off camera, and then all of a sudden everyone chucks their microphones in their face, and then they go into their pitch. And they always are to a script. They typically all have 3 messages. So they'll say what they want, and then they'll reiterate it in a different way, and then they'll say it a third way. And then it comes Q&A time, and they'll typically relay the same answers in Q&A format as well. So I'd say that is kind of what really stood out to me. There was not much deviation. And I think that really comes back to the media landscape being awash with too much information. And I think that is okay, because the shorter, sharper messaging it is, it's easier for people to understand big picture what's going on in the economy. And then later on, I mean, we've typically seen some high profile politicians in Australia step down, or I guess maybe they wouldn't like to call it that. Some people have been asked to leave by their party members in Australia, but then they've kind of worked over to ASX top 200 companies. And the same type of language skills need to carry out as well for investors to really understand and comprehend, okay, what is the investment opportunity here. So I'd say that messaging was really, the standout for me. And I think for people like you and I, and for people like investors listening, we also need to often sift through the noise and then just get to the core messaging when some of our political leaders, or when some companies that we're looking at investing into aren't as sharp as some of those other people out there. So dive through the detail, or sift through the detail, and get to what you think is going to drive the most value for that company, or what is the key focus for the government, or what are they really saying.
Brilliant. Love that response. Thank you ever so much for that reply, Jessica. Now, in 2019, Jessica, you joined Bell Direct as their market analyst, or one of their market analysts, with responsibility for providing in-depth markets and stock selection analysis, and identifying trading and investment opportunities. Now, what I wanted to ask you, because obviously that was just prior to and then throughout the lockdown period, what difference in trading and investing behavior do you recall, if any, regarding the investing community? Because it was lockdown, there was a bit of frenzy in activities. What was the nuances that you noticed differently to what you'd seen before when you was looking at the markets?
Yeah, that was a really interesting time, because casting back to 2019, and indeed when we were in lockdowns as well, the turn of phrase was monetary policy easing. So the central banks around the world were cutting, trying to stimulate. They were handing out checks, putting deposits in people's banks. And there was essentially a buildup of capital. And what we noticed at the trading firm that I was in is that we had, not only at that trading firm, but Australia wide, and also more broadly globally, there was a huge influx of capital to the market. And it was typically made up of first time investors. In fact, the numbers suggested by Investment Trends were that most of the money that came to the market in the pandemic era was actually from new investors. And then we saw the meme stocks gain notoriety. And then we saw this huge influx of capital like we'd never seen before into the penny dreadfuls, and also into those stocks that had no recurring revenue, those stocks that essentially had no laurels. Not pointing out GameStop, but GameStop essentially a dying business. No one typically goes out and borrows. I feel like an idiot for saying this, DVDs, but I mean DVDs, DVDs. I don't even know what GameStop sells, but that front of store, leasing facility for games, that is a dying industry. We've seen with Netflix this huge pivot to online as an example. So we just saw a huge influx of people getting onto GameStop, and then taking that and then extrapolating that out. This silliness not only was in stocks that had no forward income and cash flow expectations, but they were also buying stocks because they had the same name. So people on the ASX, for example, in Australia, saw a ticker code GME. And little did they know that they were buying a little known mining company that just had the same ticker code as GameStop. So this shows you this massive exuberance that was in markets. And it shows you this just was just berserk. But I think it really comes back to, as an industry, I don't know, I feel like we had a huge role to play. Maybe we didn't have enough education out there to help and guide these investors. How do you pick a stock? And then bring it back to your question, it's really funny because if you actually did a Google search for how to buy a share or how to pick a stock, the Google search for that hit an all-time high in the pandemic. So that was showing you that people were going to Google for tips and advice on how to buy a share. So that kind of like rounds out, that 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 era that I hopefully hope that we never experience again on the back of uh, a once in a lifetime virus.
Yeah, I hope so too. And you're right. The number of people that are opening accounts was absolutely phenomenal. And they really had no education. It was just a case of, I'm bored. Everyone's talking about this, that, and the other. I'm jumping on the bandwagon. It was just incredible times. Yeah, thank you for that recall there. Thank you, much appreciated. So in late 2021, Jessica, we're getting to where you are now. You joined Saxo Markets, which is a subsidiary of Copenhagen-based Saxo Bank. Please, can you share with us a little overview of Saxo Markets, its role, services, and function in the market, please?
So over in Copenhagen, if you're Danish, that's how you pronounce it. In Copenhagen, that's where our headquarters is. And we're essentially an investment bank. So we have several different platforms depending on the type of investing or trading that you want to focus on. But essentially, when Saxo came to the market some 30 years ago, we just aimed to provide investors and traders access to all investment classes on one platform. So if people want to buy stocks, ETFs, if people have a view on a currency, let's say if they think that the Federal Reserve will essentially take their foot off the gas and stop hiking rates in another 2 months, then if that trader or investor thinks the US dollar would come down, they might essentially put a short on the US dollar. So people can trade currencies, and then they can also trade and invest in commodities. Let's say, for example, at Saxo, we're pretty bullish. We're very bullish, I would say, on copper, on lithium, and aluminium. Let's say if you're an investor or trader and you wanted to invest or trade in some of those and then potentially buy them now because they were cheaper than they were 2 weeks ago, then you could potentially buy, say, a copper contract with us, or you could, of course, buy a copper stock, etc. And then, of course, for the more sophisticated investor or trader, there's options, and there's all different types of optionality that are available to essentially protect your portfolio through all market situations. So if you don't want to sell your Apple shares or Tesla shares, which are a great example, and you're a little bit worried because the copper price and the aluminium price is going up. Aluminium, you need 250 kilograms of aluminium for an electric vehicle. And we know the aluminium price is likely, or we think the aluminium price is likely to go up. So you're a little bit worried that Tesla's shares could wobble, but you don't want to sell your Tesla shares. That happens a lot with our clients. So they typically put options on their Tesla stock to protect themselves if Tesla shares fall. And so that's an example of how people kind of use our platform. And the way that we work at Saxo is, just going back to that core of what we do. So we're essentially a navigational light for markets. So we provide our view. We've got a team of some 30 strategists, and each of our strategists have got, I guess, a forte. So we've got a commodity strategist, we've got equity strategists, we've got a foreign exchange strategist, and so we're all here to help clients. So people can, have a chat to us and one-on-one, and we can explore potential ideas and strategies. And then, of course, we've got a team of traders who also help people understand the instruments and stuff like that. So all, in a nutshell, we're just really trying to help people better understand what's available to them and help them execute it. But still, of course, it's general advice.
Brilliant. Thank you ever so much for that. Now, you hold an absolutely fantastic role at Saxo Markets, Jessica. So I just want you to just take the time as much as you like to explain that role as a market analyst, what it entails, the research side of it, and why it's so interesting and also ever evolving. As you say today, major news to the markets, you've got to be on top of that. You've got to then go front and center to explain it to everybody else. So just share the nuances of your role to us, please.
Well, it's a lot of fun. Every day is completely different to the next. Um, so yeah, so it's ultimately about helping the masses, helping clients, and also working as a team to share insights and leverage off other insights that I might not be privy to. So we're always kind of working as one for all and all for one to serve the masses. So I'll give you an example. Today, coming into today, we provided we sat down with our team early in the morning, and then we essentially shared our take on what we can expect for markets today and say for the next 6 to 12 months. And say if a client was trading today, one of the, I guess, bumps in the road would be one of the central banks, the RBA, the Reserve Bank of Australia, met, and we discussed what the outcomes of their meeting could be. And then they essentially hiked. They were a little bit more aggressive than expected. And then we ran through some scenarios on, okay, if you've got clients out there, ladies and gentlemen, on the trading floor, if they're a foreign exchange trader, this is what we think the currency could do. We think the Australian dollar could knee-jerk rally up if the RBA is more hawkish, or if they're more aggressive than the market expects, or if they're more dovish, as in a little bit more conservative. We think the Australian dollar will continue to fall away because commodity prices have fallen away because the US dollar has picked up. We know commodities typically trade weaker when there's a higher US dollar. So because commodities, for those that might be new to investing, every single commodity except one of the major commodities are traded in US dollars. So this means a high US dollar typically to most companies means they're more reluctant to buy those commodities, and they might want to wait until the US dollar comes down. So the US dollar rallied up about 3% from its low, and that means that commodities typically look a little bit more on the nose or a little bit more expensive. So we've seen commodity prices pull back and some commodity companies pull back. So then that's an example, Peter, of something that we might typically speak to clients about as well. We say, hey, girls and guys, this is something that I think we should alert clients to. For example, we've seen the aluminium price basically fall lower. We've seen the copper price fall lower and the iron ore price fall lower. We think that these stocks might be affected, and we should let clients know. However, for investors, this could be a long-term opportunity. And then we say, maybe we could speak to clients about thinking about the long-term investors now, because our view is that the US dollar will fall away, and that's in line with the Federal Reserve likely pausing on rate hikes and then cutting. That's what the market is pricing. So once that happens, the US dollar will fall away, likely, and then that will typically cause commodities to go back into this super cycle that they're in. So that's something, or as an example of a kind of a morning meeting, and then what we typically are providing in terms of a guiding light for investors on two potential strategy ideas. I don't know how much longer you wanted. I could
No,
talk
that's
forever,
brilliant.
but
No, I think it's beautiful that you explain all the different strategies and running the scenarios and giving people synopsis of what potentially could happen regarding their different exposure to the market. So I think it's really, really good that you guys provide all that sort of service to clients. So absolutely fantastic. Now, you said earlier with regards to the Saxo markets, they're very bullish at the moment on aluminium, copper, and lithium. So do you want to tell us some of the nuances of that, and obviously the connections with the electric vehicles, etc.?
yeah, absolutely great question. I guess in one sentence, it comes all back to two things: the green transformation. So there's a significant drive and a significant um, drive up in demand that we're likely to see. And secondly, there's restricted supply. And these two factors are causing prices to rise. And we are very bullish on copper, aluminium, and lithium because of these large two schools of thought. And we think that this will probably continue and be probably a mega trend and super cycle that we think will probably be around for the next 10 years. So what are the numbers that we're looking at? So if you think about the body that you may have heard of called the EIA, they're the International Energy Agency. They're made up of about 30 different countries around the world, including the UK, New Zealand, Australia, the US, and Denmark. And all of these countries have actually pledged to be emission free by 2035. And some of those countries have also, and this is the important bit, have also planned to ban the sale of fuel combustion engines by 2035. So that means if you're not selling electric vehicles in that country, then you're probably going to be making a cash flow and revenue loss if you're a car maker. So that really puts fire under the likes of VW, Ford, General Motors, BW. So this goes back to that demand push. So we move now to the car makers themselves. So that kind of coincides with why Ford, VW, GM, BW are racing to produce EVs and phase out fuel combustion engines because they're not going to make any money, but that's also where demand is going, right? And the other thing is that we know EVs are not only cheaper to run, so from a consumer-led angle, there's a huge generational shift that we're likely to see demand pivot to that sector. And then, of course, in the last 2 months, even in fact the last several weeks, we've seen Tesla and Ford slash the price of their EVs. Further back out, we saw BMW and Mercedes slash the price of their EVs. So there's lots of competition coming into the space now, meaning people like you and I are probably going to be more incentivized. Speaking about incentivized, the other pillar that's supporting growth is that we've got countries around the world, i.e., China, the US, and even, believe it or not, sleepy Australia for the first time is actually giving people a small, tiny kickback for getting an EV. We're still not there yet in terms of encouraging people to get EVs, but nevertheless, you get the picture. There's this global push to move to EVs. And then thinking about that undersupply, why on earth would there be undersupply? I hear people say to me all the time at investor events that I do for, say, the ASX or Women in ETFs, which is a global organization. They say, well, what do you mean there's a lack of supply? How can there be lack of supply? You can just dig it out of the ground. Well, no, you cannot, because the major lending banks around the world are likely to not lend as much as they could 5 years ago or 10 years ago because of their ethical or environmental sustainable government's mandates on lending. So this is also causing the lack of supply. And then the other thing that's causing a lack of supply is, of course, weather issues. I'll give you an example. In Australia, we had some flooding late last year, and that caused coal supplies or coal producers to drop their expectations for how much they could produce. We also had some iron ore companies and lithium companies, say in Argentina, also be hit by environmental factors as well. All of this, putting it all together, mix it up, and you've basically essentially got the same issues now that will likely be around for the next 10 years because of the environmental sustainable mandates, but also uh, supply is quite inelastic. It takes a very long time to get a mine into place, to get a mining license, and to get it approved. So all these factors are going to underpin higher prices for the long term. One final example, if I may, Peter, Rio Tinto, a really good example, one of the world's biggest miners globally, diversified miners that is, besides BHP. We all know that they had a lithium mine license in Serbia. They were planning to be the biggest producer of lithium in Europe. They had the mine license, and then protests actually occurred in Serbia. And I guess essentially um, they were not able to start that mine. So, this is an example of even though a company has a mining license, environmental issues pop up, even though they got the funding, they couldn't actually get the mine underway. And herein goes back to this huge issue. We've got EIA, we've got governments pushing EVs, we've got consumers wanting EVs, but there's a lack of supply. And this is an issue for EV makers who are paying these higher prices, but it's a good thing for companies who are in this space. So we're bullish on copper companies, aluminium, and lithium miners.
Thank you for that response. I think it's interesting that the IEA are trying to just push and coerce so many people towards electric vehicles, but yet there is this counterparty sort of risk where everyone's going down that route, but the expense and support isn't actually there to fund them to go down that route. So it's quite a a difficult sort of balancing act, isn't it?
You're so true, absolutely. And I think that that is a huge issue. I mean, we don't really see that in Europe because their taxes are so high, about in the order of 66%, say in Denmark, for example, where our that's the top tier tax bracket, by the way. But there you've got phenomenal infrastructure. Compare it to Australia. Our major exports, one of them is coal, a fossil fuel, and it kind of shows you that there's kind of a little bit of I have to be careful how I say this. There's a little bit of maybe corruption holding back some governments. I mean, I'm proud to be an Australian, and I'm proud to say that Australia is able to grow GDP. However, the makeup of our income is largely holding the government back on pushing to be a leader in the EIA. So I agree.
Thank you for that. Now, you've touched on the commodities there, and the one that you didn't speak about much was gold. And there's a massive influx last year. Oh, sorry, reverse that, not influx, but increased exposure to gold from central banks because of all the geopolitical things that were going on. The largest amount of gold hoarded by central banks since 1967 last year. Was there any other drivers other than geopolitical going on here, or were they just trying to say, look, we don't want to be purely exposed to US dollars?
I love this question. So I'll answer it by saying this. So at Saxo, we're very bullish on gold as well. And so we actually have an outrageous, pardon me, we actually have an outrageous prediction that says gold could hit $3,000 this year. And so gold is under $2,000 US today. How could it possibly get there? And the scenario that you've laid out, you add another layer on that. And we've not only seen central banks increase their positions to gold, but also this year we've seen sophisticated investors and retail investors also increase their positions to gold. And we have to look back at history to see that our outrageous prediction of gold hitting $3,000 might potentially come true. And I'll play it out in this scenario. So every time the Federal Reserve has paused rate hikes and eventually cut, the gold price has strongly rallied. So the gold price has strongly rallied throughout history every time the Federal Reserve has paused rate hikes and then paused. And the gain that we've seen in gold to the upside to a new high is more than equities. So if we think about when the Federal Reserve, one of your first questions was 2019, what a year, how did people invest? Well, let's think about this. How will people probably invest when the Federal Reserve pauses rate hikes and then maybe cuts? Well, I say to you, it probably might be in gold. And so in 2019, when the Federal Reserve paused and then started cutting rates, equities we know strongly rallied, but as did gold. Gold rallied up 61% to a new high, 61%. And then we think about the S&P 500 and the ASX 200, they rallied about in the order of 40 to 50% to respective new highs. So that's a scenario that we think could possibly play out. And the factors that you need to look at for this scenario to play out would be the rolling over of the US dollar, because we know bonds and the US dollar have like an inverse relationship to gold. So we saw gold charging up when bond yields fell and when the US dollar fell. And now the next catalyst will be watching the US dollar, Peter, and watching bond yields, because I probably would urge people to just keep an eye on those factors, because you'll probably see the gold price start to rally up again. And that might be something for you to think about if you're investing or trading in ETFs. Gold companies are typically likely to outperform, but as bullion is as well.
Thank you ever so much for that, Jessica. I wanted to touch on something you said earlier, which I think is really, really important here regarding the educational side of it, because obviously these interviews that I'm doing for the Investing Matters series is all about education. And you touched on the Women in ETFs forum, or whatever it is that you do. Can you just tell us a bit about that and your role in it, and why it's so important to get women involved in investing, please?
Love it. Well, there's a huge gap in women's financial futures compared to their counterparts, not only with their savings and their investing, but their self-managed super funds. And I think all of that comes back to education. So for women, they feel it's a daunting task. They feel that, quite often they'll park it in the too hard. I'm not going to learn that. I don't understand it. So they'll park it subconsciously in a basket that they don't want to learn. But I should say, but when we pair it back, if we just think about investing like we were buying a stake in a business, if you looked at a florist and we know that they're selling flowers at a rate of knots, then that possibly could be an easy way to approach investing. So women in ETFs is basically a pool of women in the industry from all different bodies, from all different ETF providers around the globe, other financial institutions, and we get together and we come up with ways that we can educate the public and just make it really easy for women to get involved in bettering themselves in financial education and also taking action. So that's what we do.
I think that's a fantastic and brilliant initiative. Thank you for sharing that. I hadn't heard of it, so really, really, I'll have to check it out. Thank you. Now, I want to switch things up a little bit here, Jessica, and ask you about your own Investing Matters strategies. What really matters to you regarding your investing? Can talk a little bit about your portfolio as well. So, how do you go about filtering your own stocks for your own portfolio? You've got access to all these fantastic researchers and analysts within the Saxo team, and then you go, right, okay, done all my research, I'm going to buy this, this, and this, and put it in. To share some of that, some nuances about Jessica Amir's portfolio, please?
So last year, we had a view that commodities would outperform. And we also think that'll be the case this year, given material earnings are probably likely to be 60% higher than they were last year. So coming into 2022, I had an overweight position in commodities for that reason. And so I also thought about what commodities did I want to be exposed to. So I was exposed to lithium, and I was also exposed to coal. And the reason that I was in coal was because I know that coal demand usually peaks at the end of the year, when China is facing peak demand. So the air is typically filled with thick smog in China, and that's because they're essentially burning coal to produce energy so that they can keep people warm and toasty. Because as unfortunately, as unlucky as it is, because of environmental issues, our winters are getting much colder and our summers are getting much hotter. And with this thinking, given that we've got perpetually lack or a lack of supply, I went very heavy into coal. Not for it's really against my ethical thoughts, but I was purely chasing returns. And so I'd say that they were my big overweights. I also did have some FX exposure as well. Um, and in terms of portfolio reviewing, I typically review my portfolio on a quarterly basis. Um, Sometimes it can be hard when you're helping clients. You kind of are like a plumber and forget to do your own plumbing, because that's actually what happens. so
I
so
fully understand that.
yeah, but in terms of my strategy, it's thinking about the sectors that I think will likely benefit from the macroeconomic climate. So are central banks cutting rates, or are they increasing rates? What's happening on the supply side? What's happening globally? Who's opening their economy? Who's closing? And then I also think about, um, having one up on Wall Street, as Peter Lynch said. Can you actually see what's going on around you? So do I see more people or less people buying Starbucks coffee? Bet your bottom dollar I do. That's as an example. Um, so really becoming observational really helps. And that's what kind of got me onto the EV bandwagon early on, when I started to see this huge push and I started to see more EVs on the streets and I'd never seen before. Um, because as we were saying, in Australia, our infrastructure is perhaps not as limited, or perhaps very much limited compared to what it is in the UK and Denmark and so on and so forth. So when we see an EV popping up, it was like, oh my gosh. And so then you've got to think, well, there's an EV. What are the key components of an EV? So it's just kind of like playing, brainstorming in your own mind and thinking how that could potentially play out in investments. And the other thing is, I always bring it back to basics. So we know cash flow and earnings growth drives share price growth. And when central banks are hiking interest rates, we have to be in favor of those companies that are likely to do well. So that's why I also invested only in commodities in 2022, because they were the ones with the strongest cash flow, free cash flow growth and earnings growth. And then we saw that with, with Whitehaven Coal, not only 333% profit growth, but their earnings growth was 1,500%. And that was some of the highest earnings that we've seen across the mega caps around the globe. But it just goes back to basics. Earnings growth drives share price growth. Think about that with your portfolio.
Now, with regards to your holdings, Jessica, you've talked about how you go about finding them, selecting them, and reviewing them over the period of, I think it's a quarterly, regarding the stocks you hold. What was the last time you did a review and a holding, and you looked at it and went, it's time to move on now, and you that one, exited, and what led to that decision of you moving on and closing that particular holding in your portfolio?
Really good question. Okay. So the last time I reviewed my portfolio was coming into 2023, and I sold out of coal. And the reason that I sold out of coal was because I knew that China wanted to come out of lockdown and that they didn't have enough electricity to keep the lights on. So last year, China ran out of power and the energy crisis was all over newspapers. And China didn't want to have blackouts again because that caused their hospitals to, turn the lights off and factories as well. So then China decided to pump up coal production. And so that essentially spooked the market. And I was thinking ahead, and well, that's probably going to spook the market. So we put out a tweet. I put out a tweet, and then we started filtering that through to clients. And then I also, not in that order, but I also was getting ready to trim my position. And then I exited my coal positions because I was thinking the coal price would pull back. It did, and then it's fallen 65. Sorry, pardon me. I said that with dyslexia. It's fallen 36% this year. So
Okay.
that's an example of how thinking ahead can kind of help you protect your portfolio and lock in profits as well.
Brilliant. Now, Jessica, you've been in the markets. You've qualified as a financial planner. You've been through different exams. You've worked all over the place, and you're looking to actually help so many different people, including female investors as well. If there was one investing book, Jessica, that you could recommend, which book would it be and why?
Peter Lynch, One Up on Wall Street. So why? Because I think some of my best positions, when I look back and I track my investments on a spreadsheet, whether I was trading or investing, I think about the best strategies that I executed and the best returns that I got, and they were from investing, not trading. And the only way that you can get ahead of the market is if you invest typically in a company for a longer term over a longer duration. And that is only by being aware of things that are going on around you. And Peter Lynch in his book says you can have one up on Wall Street if you're observational. And that was kind of how we got onto the talk about, EVs, seeing more EVs pop up in Australia. But there still is time, I guess, for those that are thinking about lithium as well.
Brilliant, thank you. I love that reply. Now, I'm sure you've seen these different bits of research around, Jessica. Various studies, and it's been proven as well from these various studies that women are in fact better investors than men because they let the power of time and compounding generate better returns. What guidance would you give to any newer investor looking to invest long term or on a generational basis?
Great question. I'd have to say, just make it really easy on yourself. Think about a company that you like that'll probably be around and continue to innovate and grow over the next 5, 10, 15 years. Think about that, how that company is being led. What is it saying now and how is it positioning for the future? For example, Fortescue Metals, as an example, they're one of Australia's or one of the world's biggest pure iron ore companies. As an example, they're only making money from iron ore now, but in the future, they want to be the world's biggest producer of hydrogen. So that could be something to perhaps consider. Maybe not what a company is producing today, but what they want to pivot to, and look at the company leadership. What are they saying? What are they focused on? How are they investing their money in R&D? those are all the things that you might like to think about before you make a long-term investment for the future.
I love that response. Absolutely fantastic response. I think what you touched on there really triggers me, because we're so focused. I think so many investors are so focused on the now, and they don't look ahead of what's going on. And some things are thematic and some things are trendy. And people go, well, that's a new trend, and they jump on it. But it's not about the trend in sense. It's where the investments are going, where the R&D is being spent. I think that's the essential nuance that investors need to pick up on. So thank you for that reply. Now, I've got two more questions for you, Jessica. I'm conscious we've had you here for a long time, and you've had a full day at work. Now, as a market analyst, hours on occasions can be very long. How do you maintain your physical and psychological well-being? Are you a runner, a cyclist, a frequent visitor to the gym? What's your secret to a balanced life, and living your best life?
Oh, it's so important, isn't it?
Yes.
In order to have a sane mind, you need to have, I guess, a functional body. So for me, I think it's really hard sometimes when we're investing and trading and when we're looking at markets all the time. Sometimes it can be hard to switch off. So you need to have an outlet where you're just literally sweating the house down. For me, I believe it or not, I am actually a weight lifter, and I'm aiming to compete in the lights went off in a natural bodybuilding competition. So that's something that I work on. I also am a part of a running group and a swimming group. So after hours, not really after hours because the lights are off, but on weekends, that's typically what you'll find me doing.
Brilliant. Now, how long have you been weightlifting and bodybuilding naturally? How long have you been doing that?
Yes, naturally. Um, I've been doing it on and off for about 5 years. However, this year in October, it'll be my first competition. So I think it's really important to have that, mental clarity, and sometimes having, that break in the week, it can just really help, and it just really helps reset. When you're pushing yourself physically and you're achieving something outside of work, it really helps you stay focused and keeps your concentration high during the day. But yeah, whatever it is for you at home or whatever it is for you at Peter, I don't know if you're into training, but yeah, I absolutely love it. So important for balance.
Brilliant. Now, myself and all the Investing Matters listeners globally will wish you very well with that competition in October. So that'll be absolutely brilliant. We'll be cheering you on, Jessica. Okay. I've got
Thank you.
I've got one final question for you, Jessica. I'm going to give you some powers now. Okay. I love giving this question out to people. I'm going to bestow upon you, as you are our very first Australian-based guest. Right. So we're absolutely honoured to have you. I'm going to grant you the powers, Jessica, to change and improve the quality of every Australian life and individual on this planet. What would you change and why?
That's a very hard question. I'd say the educational system. So if we don't educate, there is no systemic change and the future generations won't learn. And I think, I could say, I'm going to give everyone $500,000 or $1 million, but they won't necessarily know how to invest that or invest that to help themselves or to help the community. But I think starting with the education is really where we can drive change. So it's up to the school syllabus, it's up to the educational system to really change and start nurturing younger generations, teaching them about financial literacy, teaching them how to invest. What is a company? Why should you invest? How do you invest? How do you round up your transactions on a daily basis when you go to pay for a coffee with your phone so that you can invest? Little tips and strategies. But ultimately, I think the best thing that we can do as a society is educate the young ones.
Fantastic response, fantastic reply. I will grant you your wish.
Yes.
Oh, Jessica, that was absolutely fantastic. Thank you ever so much for being on the Investing Matters podcast. Thank you ever so much for being our first Australian guest based down in Sydney. And I will look forward to continuing to follow you across social media. And I look forward to when this is published for it to be supported by you and all your followers. That was Jessica Amir, Market Analyst at Saxo Markets. Thank you ever so much, Jessica. Get some rest, and thank you ever so much for staying up for us today. God bless you.
Thank you so much, Peter, and bless you. Thank you so much. It's been a privilege and an honor, and everyone here in Australia absolutely loves your work, and looking forward to seeing your channel thrive and grow. Thank you so much.
Thank you very much. Take care. God bless.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.